I'm gonna do some back tests. I believe that was Friday, right? Yeah. Oh, we're doing. Oh, it doesn't matter. I guess we'll just adjust this and then go on back test. What the hell? I don't know what I'm doing here. That's not a good start. It's in the same month, so fine. So last week's low and yesterday's low are basically the exact two. Today's low was low of the week. We did bounce off though, which is around the same low as prior week too. Right? Yeah, around the same low as prior week. Literally went to the higher of prior week and came back to the lower prior week. Interesting. When you go to the high, it was went to the high pre market probably open on Tuesday. Then we retested last month's high. It was new, so if you can't take this trade, so risking this low, get up here, guess at this point. If you were to take this trade, she had been risking up here. Oh well. 21, looking for 42, which you do get. Interesting. Because getting in this trade is not a bad idea on that kind of risking this high. You wouldn't have gotten stopped out. This was another trade you could have taken this, so instead of been getting in at your risking up here now. There is no prior, so you just risk 4 above that, so 20. This is 30 over 60. Should do basically like a, it'll probably be 4 or 5 above that. So when price comes back to this point, don't like the candle, take this trade here. This is the technically the low you want to use, but not as always low off. Oh, by that time we already broke this low, so you're no longer. So, oh yeah, that's why we'll be using this low. Oh, on this one though, we'll be risking using this. We already broke the base, so using this low and kind of after that, so 15 technically. I'm looking for 30. Oh, okay. Whatever. So let's go to the weekly to adjust this. No news, so volume, got a volume break out of this consolidation here. Ideally, we want price to come down and reject so we can reach this low So basically that candle there. Technically this low is still forming, so I want to reach this low here is technically this candle. But so if you consider this as a base, then you have this low. Yeah, so one risk at least 5. Yeah, so this low is risk. That's not a bad candle, you can definitely use them. Risk them this low. So 6. Or just that low, let's call it that low. So that low is 5.5, looking for 11. Or 55, looking for 110, however you want to say it. Obviously price broke through this high, which is, we expected it kind of drop from here, but we didn't get any. It's loud. I want to switch that music in a second. Anyway, we didn't get any drop from here. My price came in, we came in at around 755, and price was rejecting prior, but we already broke through by the time it came in. So, but we didn't get any drop. That's what we know. And so the next point is around here, this consolidation here. Even this was not bad. So we'll have to wait and see where price actually shows volume that wants to go to the downside. Otherwise, we're not going to try and predict it. That's good candle, but that's good rejection, and plus volume already came on here. Not a lot, but there was some. That's really good. And it looks like it's continuation. So we'll take a hedge there. That candle, the risk will be this high. So that candle there, so 8. Because I guess technically the risk is higher day here. Yeah, technically the risk is higher there, so this high here is a 5. But I'll just take the high because. Why am I taking the high? Because kind of unsure whether our price wants to drop from here or not. So we just take the high. We just take 6.5. Plus also if we 11, our TP is around here. 11. So it's a good thing we take this one. And then if price comes up, we'll likely get stopped out for profit. Otherwise, we're not breaking on anything yet. We're already in 2 trades, so we're not going to be adding anything yet. Okay, so it's like we'll break even, take a loss on this one. And so the other one we're risking 6.5, we're looking for 13. So all the way down here. Even after this kind of, you could have put this at break even if you wanted, but it's up to you. So next we'll give a price to come around here, which is done now. Around here, below the risk is down here. That's very good rejection in there too. If a next candle. Well, now I obviously break even on our trade there. So we'll see where price wants to react up. Otherwise we'll try out here. Around here, having this low as a risk. Let's see. So price wants to react from there. And he has a move right back up to this highs here. So if we get a pullback, there's no reason why we shouldn't take a hedge. Okay. Pullback broke this low, so that's not good. We're very close to our TP. At this point, we're in profit on the day, probably by like 8% or something. our TP is just under this line here. So we could take a long right there during the price. I mean, price didn't really move. Let's wait for this point here. This is where price really ran out from. So price going down, but it's rejecting nicely. Our price is in this base here. I'm gonna have to pause this music because it's making me frown. Like squint my eyes. I don't like it. Yeah, this base is not bad, so taking this base, the risk is down here. And we already hit our TP on our short, so taking this trade brand new, risk is down here. Well, one risk at least 5, so we're risking just here. Might as well just risk the low, so 7.5 right there. That's something there. Nice rejection, but it's not bearish. Looking for a place to hedge. That's good volume to the downside. Rejection. Well, now you're break even, we didn't get any chance to hedge, so keep watching. It's good rejection. Good rejection. Now approaching this base here. Visual representation of this base will be something like this. So it's having good rejection, but approaching that base. Yeah, maybe we should have drawn a base like this. Yeah. So we should have taken our hedge. Obviously we're break even, so even anything will still be break even, but yeah, once this broke we're already break even, but we should have taken our hedge there. And also for this, I think we should have just taken at 5, risking 5, looking for 10, which we don't get, but broke even there. Alright, got in a hedge there. So on this hedge, risking above this candle, so now they just take it at 5, minimum 5, right? So right there, or you could just take it right there, that high there. So 5.5, looking for 11. That's 11 down there. This is where price ran out from. This price rejecting here. Probably if we didn't take out TP there, then we'll break even here. And if we did take out TP there, then this is not a bad place to hedge, given this rejection. Probably want to hedge there. This price ran up nicely from here. What's the time? Oh, 140. No trades. So 5.5, looking for 11. You got 11. So on this day, you got 10% off of this trade after winning. You got 20. You got, maybe if you took this profit, then you got 20 or another 20%, or basically 15% on this trade. So that's 25% in total. And then if you took this trade, you get another 20%. So that's 45% in total. Yeah. So if you are taking this trade here off of these lows, that's why I wanted, because it was hard to say which low. If anything, it would have been this low. If you're taking the hedge here off of that low, risking that low, price already at that low, so you may want to go risking this base. And for that base, down here is a risk, and again you want 5, so at the very least you're risking down here, right? So, and then you'd break even on that trade and take a hedge there because you're waiting for price to get here, and here is kind of close to. So if you're gonna wait for price to get here, you might as well take it off of the base, because the base is where this kind of bounced off of. I mean, price did run from here, so it's also not bad if you took it from here. Regardless, like any one, this one worked, this one worked. This one is guaranteed for sure. You likely break even, but this one you could have taken probably up here because it was already that close to 2 hour, and this is a heavy. This is a place where there was heavy rejection from. So I'll go to the one that's Monday. Oh, that was a long Monday. 3, 4, 5, 6. No volume, so omega 7. Go back to 5. I don't see some. Oh shit, it went back up. I saw the 1 hour and I was like, what? But yeah, it went back up. The reason why I was also hesitating to take a trade here is because we're on a downtrend, so we need to make a lower low. So only after we made a lower low here should we have even considered taking it. Without that, we have 145, which I would not do. But if I take a trade here, then I have to use this low, and using this low at least 5. Yeah, we may not have to get it stopped out, but honestly, I'd prefer for price come around here, around around that week there. So that particular week. So if price came around there, that'll be my next trade. Otherwise, this zone. So there was this zone, or this base. There was this week. There was these lows here. These lows here. You use this low and use below that low. So there, you're going to stop that though, but I really like this candle rejection like that, this particular one. So I may not have taken that trade. I'd waiting for the next one candle, and now that in blue, I'd waiting for a pullback. We're waiting for a pullback, and we get that here. That pullback breaks the low, so that's not the best. And at that point, might as well wait for price to go one more down, which is here. But again, you could have taken here if you're a little bit hasty. Just risk at least 5, which would have given you a good point to risk. At least 5. Alright, so coming in at 755. Lots of bullish volume on the day. Price dropped from here. It just did that but rejected all of it. So honestly, I'll be looking for price to pull back. Give me a long somewhere in here. It was 730, 725. Give me a long somewhere in here, and let's go up. There's this top side here. Right now, price formed the base, went back up. There was that rejection in that doji. That broke this high, but there's still rejection here. So this is the next high you can use. This is the next high you can use for your risk. For that high, you want to use that doji candle there, or that bullish candle there. So if you're taking trade at that doji, it would look something like this. It's risking 7, but that would mean you have to go against this whole base that formed here after this week. I personally won't. I would not be looking to, so I'll be waiting for a pullback for a long. Very good volume. The price dropped from here. You want to see how price behaves at that wick there. So I'll touch the wick yet. There you go. Touch the wick and it's bullish. Volume just came in and it just continued going. It didn't give us an entry to the long side. Didn't give us an entry at all. So we're still just watching for the day. Still just watching. Next rejection up here. This week's here. So let's see how price interacts. One more candle probably. Otherwise, so that's a black candle. That's good. If we get another bearish sign, I'll take that short. The risk for this point, for this risking these highs, right? This high is up here, so risking the high up there. So 5, 1 to 10. So 5 plus 4, because prior count is far. So now we can just use prior count 7. It got stopped out right there. Oh, not yet, I guess. But spread we are taking you out. Price is holding up here. Let's say this was a loss. Holding up here. Holding yesterday's high. Oh no, we didn't switch it. We didn't switch it. So this is yesterday's high. Nope, this is yesterday's high. And this is yesterday's low. Alright. Holding last week's high though. But it looks like it's holding to break it to the upside. Good rejection still. It's about to break it. Good rejection there. Goes to yesterday's high. Rejection. Nice. Is it going to be continuation? Nope. Candle's good. Good. All looking good. Looks like consolidation to the upside. Right now there is a consolidation here. Or a base here. So let's see how price interacts if it comes down here. But the better base is this down one here. No volume to the short side at all. No volume to the short side, and price was really holding this last week's high. That's basically the end of the day. Yeah, that's the end of the day. If we took this trade, it would have been a loss without a doubt. But this was a good trade because price came down. It come down here. It was the only point it could come down to. But we were pretty bullish, I guess. Trying to force it on this blue candle. Could have. Risking low of day. Candle below, so 9. Over 18. And then if you're taking that, then this would have been a hedge. And on this hedge, you could have lost it. And the 18 would have just been a little bit above your loss. So 18 would have been up here. And so you'd have made 10% on the day. If we call this also a base, after price moved up, I've probably seen this honestly. So after price moved up, we got a base here. Not the best, but there was a break of structure to the downside, and price formed another doji right after it broke. So on the pullback, it's not a bad idea to go in long here. Even that, so I've gone in long here, risking below, so that's there. Could have been something like this, risking here. So about 6.5. So looking for 13, which you get at end of day, which is not bad. So this trade is more likely for me to take than this trade here. This trade is more unlikely, but this trade is more unlikely. And also the short, likely to lose the trade there. Likely to lose the trade there. No volume. I got this, man. I got this. Alright, so at 5 minutes now. Okay, volume to the upside. We're here at 8 o'clock. And how's price doing? So yesterday's high. So around yesterday's high. Ideally, one price come down here so we can go in long. Our risk is, so this low already happened. So this is our risk, and so we're risking below that candle there. This candle here, and then otherwise price comes here to this base here again. We may be looking for a short. So let's see what price wants to do. Came down, nice rejection. I'll take that. It broke a new low though. So since it broke a new low, we'll reach the next low, which is down here. So basically this candle here. So about 6.5. That's our risk. And that was a loss, purely a loss. Interesting. Doesn't give any indication that I wanted to go down. So next point, we have this consolidation here, which is where price is rejecting off of. Don't mind taking that long there. Taking that long there, risking. So the consolidation would have been up to that black candle. So risking below would have been this. Yeah, so we need to be at least, for this one, we should be at least 5, I believe. Oh, at least 10. So honestly, it's fine, whatever. So at least 5, I just say 5. So just put it here. So maybe just under, so just under this base here. So just put it at 7. Another 7. Expect price to go back to yesterday's high. Okay, that's a 9. That's not too bad. It's not too bad. Not the best, honestly. Price has formed the base here now. Expected price to go back to yesterday's high, but yeah, rejected here nicely, formed the black candle. Didn't even give any indication that it wants to come down. Started coming down. From the base here, broke to the downside. Now, if we did not already get stopped out, we could have gotten our break even here. Otherwise, so might be a break even here. There's now a base at last week's high. Base, so up until this line here. Let's see how price wants to react. There. No bearish indication. still holding this base here. No bearish indication. If we're still holding this long, giving, let's say we're risking down here. Let's say we only waited for you touched the base, we took the base, we risk below the base, right? And we're risking down here, right? And so something like this, so about almost 10 even. Let's just say we're risking 10. Oh, let's just say we're risking down that count, so 9.5 or whatever. And let's just say 9, whatever. And price comes down here, it's forming this consolidation. So every time it comes down, it's getting sold back up, comes back down, gets sold back up, comes back down, gets sold back up, comes back down, sold back up. No bearish indication at this point, which is where this base is. So when it came back down, it came here. I would not mind getting in a long there, but now risking lower. So now we're in 20%. We've already lost 10%, so we're now risking about 30% of our account on this day. So we'll be risking, but now we're risking below there, or let's just say at least 10, but let's just say below there. So still the base we're supposed to be using, but we'll just risk where there's something here, and so we just risk down there. So maybe 9 or maybe even down there. But let's just call it, because at that point where we got in, price had not broken the base yet. So there's that. So if we got in there, maybe let's just say 8.5. And then you lose it all. But yeah, ever price came back, guess what's it called? Send back up. Came down, just send back up. No bearish indication here at all. So didn't expect price to come down continuously. You know, it came down again, so now again rejection, but broke the lowest. It didn't even look like it wanted to continue from this. Well, whatever. So whenever price coming to this wicks here, which it has, and now price has formed this consolidation on this day. So there's that. I mean, the only short price gave was on this particular candle here, but other than that, price didn't give any sort of short. Maybe we should, once we're in a particular trade and you're even on loss, unless the add-on is very good, we should probably just focus on hedging it versus adding to that position. I think that should be the case, especially if we're in a loss. So in this case here, we're in a loss. So we focus on hedging it, then we'll be entering here at that candle there, and we'll be risking both this, so this candle here. And so if we took this loss here, loss was, let's say it was here, and then we'll be, so this was what top of this, so this kind of 8.5, looking for 16, 8.5, looking for 17, let's say 18. So we give a price come below this low. So I am looking for price come to this week even. So let's see. There you go. So I probably got it at 7.5, 17.5, or 17 is probably what it was. So price rejects nicely. I wanna see. There you go. That's the pullback I was looking for. And there's no rejection. So we'll definitely be out now. But since there's a lot of volume here, next candle is really good. I would have to get in long there. What's that? Oh, getting in long there. So at this point now we lost 10%. We lost another 10%. That's 20%, and we made 20%. Right? It may be slightly on a loss depending on what the compound point is. So I think the first one was a loss, so it may be slightly. But these two were the same risk, the exact same risk. So it would be slightly on a loss. Yeah, these two exact same risk and they were lower. So after losing this again, we'll be slightly on a loss, but probably like 5% or less. So we broke this low, so we'll be using this low and that candle there. So about 9 points. If we just say 10, so 10 here. But honestly, we don't want to use this low here. We don't want to use this low. Ideally, price should not be breaking this low, but we don't want to use this low now. And so we can just know that we're either using this between this, depending on how much price came. In this case, we'll just be using this low there. So 9.3, 9.2, whatever. Expecting price to go back up to these highs here. Like I said, it will not be good if price broke through that. See, it will not be good if price broke through this point here. So we're now at this point here. Let's wait for price to come down to this area and show some strength. So obviously no strength anymore. Price did from this base here, so looks like price was obviously downtrending. There was still volume on it to the long side, so I was still thinking, oh, we could get a bounce back to that consolidation up there. But after that bounce didn't happen and we took that loss, then it'd be like, okay, what the hell's happening? What the hell's up? So now we're down 10% of the day. Basically, or down 15%, whatever you want to say. Like, let's say it was $1,000, right? 1,000 times 0.9 because he lost first trade times. So now, 900 times. So about $90 per trade what you're receiving on these other two trades. So on those two trades, you make $90. So you're back up to 990. So you're down 1% on the day, which is from with $1,000. 1% is $10, right? You're down $10 on the day, 1%, and then you lose this. So you're down $11 on the day, right? You lose $99 after that. So losing $99, your account's down to 891. So you're down 11% of $1,000. 11% is $110, basically. Yeah, I've even been a good ad on this particular account after price broke and held. May have been a good ad, risking the high of that consolidation. 12 looking for 24, which if I get there, but right here on this particular account, I was thinking about it when it was happening, but I didn't. Well, yeah, given that you're already in profit and price finally broke to the downside, you could add here risking the high of this, maybe even risking the high of like all in all consolidation. So getting there, risking all the way up here. So 15, looking for 30. When does 30 happen? 30 happens now. Do you get 30? Question. No, no, you don't. That was good volume that came in there though. You don't get 30, but that's fine. That's honestly fine. Kind of a base that formed here, broke downwards. Nice rejection here. Broke this candle though, but nice rejection here. This one didn't break the candle, but this did, so. But nice rejection. Maybe I've had to risk up here, but it's fine. Plus this is yesterday's low too. Price ran up from here and had volume here. So on this candle was not a bad entry. This particular black candle here. It's gonna at least 10. You won't have any stop down. You could have got a break even. But if you got in short here and then you hedged it right there, then it's like not the best. Yeah, this was what I said we could have added there. If you had added there, then you probably want to get out here or get out here. So added there. I personally probably just risk above the high, so maybe even just here 14. Just 14, looking for 28. So when we get to 26, if we didn't get out there and we had to go through all this mess, then it would not be a bad idea to get out literally at the week of that candle there. So, or maybe we can get out in here. So maybe you would have, instead of just making 20%, oh sorry, 10% in total on this two, you have your 10% plus you have this that made you an extra, you know. And then let's say you got in this, you'd probably want to hedge here, so you'd have lost this long, which you're risking down here. And losing that long without giving you the risking that, losing that long without giving you confidence for this short that you're holding. So, but if you didn't take this trade, that's fine too. You don't have to. We like to take trade on the way up, not on the way down. Ideally, it's just the way price behaves in that box here, rejecting every time. And so when price broke, finally, it's like we'd likely get a move down. But whatever. Let's say we didn't take this trade, and we lost this one. So again, we're just down 11% on the day. But if you decided to take this trade, then when price came and showed volume again on this here, then I don't see why you're not taking a trade right there on that candle. There is the base there, but this particular candle broke this candle. prior candle. So that's what made this a more bullish thing. So if you didn't take a trade here, but you get this move, there was no rejection to the upside. You get a pullback, nice rejection here. We don't want that though, but we get a pullback. This broke the prior candle. Take a trade on that black right there, risking the low, risking 10. You get it to come down here. We still didn't get any short opportunities really, and so we get it to come down here. I mean, it's not like we're looking for short opportunities now here. We're looking for short opportunities up there. So at 150, you probably want to sell your trade. Risking 10, you get 7. So that's less than 10%, about 7%. So you get 7% on that. So your 11% loss would have become 891 times 1.07. So you're back up to 95. So you're only down 5% on the day. That's fine. So it's Thursday. Obviously, this is ignoring all of our wins because from Monday, starting from Monday, we had a couple of wins. Right? On Monday, we had a couple of wins. That gave us. I will go back and check whatever. 3, 4, 5, 6. There is volume, but it looks like it's relative volume, so we'll just come back at 1, at 8. So it was 5 minutes. Before we go there, let's adjust this. There was volume, but the volume started at, it didn't start at 6, it started at 5. That's the thing. Alright, so go to 5 minutes. See? Just looks normal. And then go to Monday. So we started on Monday at $1,000, $1,000, and then first 2 trades we hedged. We lost the long, made the short, right? And so that's times 10%. We made 10% on that. So that's 1,100. This trade we took, let's say we took it here, whatever. Took it here, risking that base, so under the base, under those dojis just right there. And then we took this short, risking just above, so right above that doji there, so right there. That short, I think, was the one that took profit, right? So let's say we take this short here, risking 5 at bare minimum. I'm looking for 10. We get 10. We get 10, and like, okay, so price coming down. You're gonna see, let's say you're risking here. You're gonna see at least 5. So you know, at least in here. Outside, we could have taken this trade here, but and if we're taking this trade here and at least 5, then we'll be risking even lower. So not just this base, so at least 5 we're risking down there. Right. So yeah, so we took this risking 5, we got break even on this trade, and then we got 20% on this trade. So that's 1100 times 1.2. That's up to 13 now. So we made 10% overall and then 20%. That's 30% on the day. So that's made 30% on the day. On Tuesday, so let's say we just lost the 10%. So, but I don't think I don't think we would have lost that 10%. I think what would have happened is we would likely not take this trade. Obviously, we came at 755. We said there was bullish volume. We're looking for how price will react here. There was no rejection or up here, so we're looking for price to push down to this area here. So we're looking for price to push down to this area here. We didn't see no rejection, push down. We're looking for price to push down even further. From the base, broke above. We're like, okay, let's see. Price came down. Finally came down to our area and formed just that one candle of pure blissful volume. So there we could have taken that trade. That's what I'm saying, but let's just say we didn't. If we did, then that could have been our first trade, right? So that would have been 1320 times. So on that, if we're taking that, this is the low we're using, technically, because this is a base, so the base will probably end here, and below that low we want to use just this candle here. So we're risking something like this. So this low, below that low, so 10 not bad there. 10, looking for 20. 20 is up here. So assuming we took the hedge, more confident now, like, oh, let's just take the hedge here, up when it came up in here, when it from this 1, 2, 3 candle here. We took the hedge and the hedge lost up there, and that's fine. So we're now at 1188, but we have profit running, right? And that profit is still from that 1320. So that profit is still risking 132 bucks, looking for 264. So that 1188, let's say we have this base now, it broke above, then we get this pullback. After this forms up there, we get this pullback. We could now add on this, because now I break even on this. We can now add on this, risking this base, risking below that base. So that's 6. For this one, you want to risk at least 10 normally. So for this particular day, right? Let me see. It's hard to say. This range was under 200, eh? So you could risk under 10, so at least 5, I guess. This range was what? Over 200, so at least 10. When we go to this, be like, okay, where's price at? It's not too bad. 5 is not too bad though. Whatever. So come here. Then I reach down here. That'll be 7. So then in this case, we took this one here. The risk we're risking is this low, and then below that low is that candle, but we like to risk it further, so we risk down there. That's why we just said 10 on this one. So but for this one, it's a little more different because already we're fine here. So we're fine at this low, so 6.5, looking for 13 is what we're looking for. So we get that too. So we get 1188 times 1.2, 1425. Because after we lost, let's say we lost on this candle, it will be after we lost this that we take this trade. If we didn't already lose, then we would have been taking another. So either this plus, either we're at 264 on the day, or we're at 1188 plus 264 plus 260. So either we're at 1689 on the day, or we're at 1700 on the day. Either one works. And so that will be Tuesday. And then Wednesday, first thing we did was lose very nicely. So we lose that trade on Wednesday times 1 times 0.9. Come back down to 1500. And then we take this trade, risking the base, below the base of that candle there. But ideally, oh, below this base, so this base here, so this candle here. So yeah, so 10 basically. And then when we take this trade, we get all of this. We take this short hedge, right? Daily short hedge risking up there. And so this trade here becomes times 1.1. So we're back up to 1700 basically. After lose, so we're at 1760 now, at 1689. Not a little bit, but yeah. And then we lose this here, right? So times 0.9. But if we take this trade, then I don't see why we're not taking this trade, right? So I don't see why we're not taking this trade long. And so as we're risking 10, we end up getting, because price fell from here, waiting for price to get up here, we end up getting 7. So times 0.07. So we're at 1716 on the day, we're down to 1635. We lose about like whatever. So you get the point. So now we're on this day for the week. It's Thursday. We come, we see there's volume. It's now at this base here. I do like this candle. I will take this short. I will take this short because we are at the highs here. So I'll be risking this base. So risking this base up here. So we'll just risk up there. So 10. like the way it's playing, but it's fine. And there you go. Don't like that. Even if that's what's happening here, I am likely, depending on the next candle. Next candle is fine. Okay, I don't like that candle one bit. Yeah, should have gotten out break even there. So right now, can we hedge? Question. So can we hedge? Yeah, let's see price come down here now. We'll take it long. Oh, no need for a long. So at that point, might as well get our break even there. So get our break even there. Looking for a long, but we didn't get a long. Price has formed some kind of structure up down here. So break even. Bounce off here twice. Might as well go in long here. Don't really like it. Don't really like it because yes, price has formed some kind of structure here, but whatever. Just take it. Risking is low, so this candle here, 7. Yeah, see, I didn't like it. Didn't like it at all. Didn't make sense because this candle did not show any entry. If we had entry here, we would have taken the what's it called? Taking the long here, and with this candle would have shown entry, would have taken it long, and would have looked to either hedge or close our short. But honestly, I don't see why we're even closing our short up here because if anything, we could take the long here as an add-on, risking 6.5. Our short, we're already risking 10, looking for 20. 20 is all the way down here. So there was no entry here, but there is kind of an entry here. It's just it's kind of weird. But let's say we take that and lose this long now. Waiting to see how price behaves. Ideally, we're waiting for price to get back here. That's a base right there. Broke to the downside, very nice. So now our break even on this. Came back to the base or to this highs here. I want to see price come to this point there and show rejection, which it did. It did come here, it didn't give any long opportunities. So risking this high, so this candle there, so 6. Broke to the downside, and no rejection. It has come here now. Very nice rejection there. It was yesterday's low. I don't really like it like that. The fact that it's giving this rejection, but there is a nice structure here. I don't know. There's nowhere to risk on this, so we'll just let it be. The price has formed a low now. It's kind of 12.55. Kind of formed the low here, but given the structure, we'll still hold the short. Yeah. From the low here, I guess we could have gone in hedge. So this was break even, yes. This was a loss, yes. This, so if we went in the hedge here, then we would have been risking down here +4, so at least 5, right? So +4 on the low, so 3, so 7. We are risking 7, which if price came down here would have been good for us to the short side. We're not yet break even on this short because it's only gone down once. It didn't break on the second try. So we're hedged still, risking up here still. Still didn't get stopped out unless spread takes us out. And on this 7, we're looking for 14, which we got. So unless spread takes us out, would have been 14 here, which would have been 20%. So we lost 10% on this long hedge, lost 10%, and then we're looking for what's it called? About 6, looking for 12. What do we basically we already took profit here for the 12, I guess, around there, and so we're good here. And then on this one, we would have taken it long here, risking, like I said, 4 below, because we didn't get in here because we didn't know if price was up. After this volume, we pulled back down to this wicks, and then we got in long there, risking 7, and then we take that. So it's having 20%, it's having about 18%. So first off, we're at 1635 times 0.9. We lose our first trade, right? And then this one broke even, this one lost, this one made 18%. So times 1.18, and then times this one made 20%, last one made 20%, times 1.2. So we're at 2084 right now. This is end of day, done. So this was Thursday. I thought this was Friday. Okay, we'll go to Friday and do that too. Alright, so this was the low of the day on this here, and this was the high of the day on this here. Alright, that's 1, 2, 3, 4, 5, 6. No volume, 7. Alright, go to 5 minutes. Now, what's price doing? Good bearish volume, good bullish volume. So we want to wait and see what price does here, or ideally we would like to see what price does here. So if you want to put a line to it and see what price does here, if we're going to take a trade under here for the short, then it would have to show signs that it's done moving up. If we're going to take a trade long, then I want to see what price does here, coming at 755. So looking bearish. Okay, that's good. Next candle, that's really good. I will take that short there. Take that short there. Is that really good? Whatever. 5. Risking going this base, so let's risk about that. So about 15, 14. Yeah, 14. Don't really like that candle. Let's see. Don't really like that candle though. See how price behaved here, but don't really get. Waiting for price to get here. If it's gonna come up before, then okay, that's good. I want to see it pull back and reject. Nope. I want to see price react here, but it broke through. So we're risking 14, and we are getting 28 all the way down here. So I want to see how price interacts here and this lows here. Honestly, this base here. So we don't like prayer candle. Let's wait. Don't like that candle. It's not a bad candle there. Nice volume coming in. This is a base, not the best base, but this is a base. Yeah, waiting for price coming here. No rejection though. Now we're waiting for price to come in here. We're waiting for price to get to this base, but as you can see, there was no rejection off of this base, right? There was that, but we didn't get an entry. Now we're waiting for price to come in here. Guess we could have just gone in risking literally just the base, maybe 12. Or maybe that candle, so 13, looking for 26. Should have been down here, but let's see. If it even gets to 30, who knows? Looking for a place to hedge this because that's nice volume there. We are still looking for how to get out of our trade. Fun, and then, but there's been no entry yet. No entry yet. How annoying. How freaking annoying. If this happens to me, I'm done for the day. Like, that's too exhausting. Way too exhausting. Way too exhausting. Come on, man. Are we begging for the thing? Are you mad? Maybe this blue candle, but that's about it. Maybe hedge at that blue candle. Risking below. Because if price broke that, then we're in profit, right? I guess because we needed price to really break and we're far, we could have taken that hedge forcefully. So risking 10. Right, so risking 3 under that, so 7.5, risking 10 or 11, and looking for 22, which in this case would have gotten, so that would have been a 10%. Oh, because this is big break even, that would have been a 20% trade, because that was really far. That would have been a 20% trade, which is what would have gotten on the first one, regardless. So if it had broken this point, it didn't get to where we wanted, but it was. We're still not taking profit off of this, so it's like, might as well, right? Otherwise, we're break even. So assuming we're break even on the day, so let's just say we're not done trading. It's 12 o'clock, whatever. This is where we want the price to react from, but the price went up nicely. This is a base formed right here. There's a candle we're risking. Alright, let's go. Let's price pull back to the base. No, not yet. Forms a base up there. Let's price pull back. We're still waiting for price to get to this line. That's where we wanna. Price forming a base right under it. That's not the best. Form the base right under it. Rejection, but no entry. 31, 30. That's the end. Price just consolidate, just like today. So that's the end. So if we took the trade, if we took both trades, then would have been up times 1.2, would have been at 2,500. Otherwise, we're at 2,000. Doesn't really matter. Now, if starting from 1,000 on the day, if we won every single trade and we made 30% a day, we times 1.3 times 1.3, 2, 3, 4, 5. Damn. Day 1, day 2, day 3, day 4, day 5. Holy shit. 3,700 on day 5. Making 30% a day. But we didn't make 30% a day. From Monday, it was 10 plus 20%, so that's 30%. This day, if we didn't take all of these trades, then we didn't take this trade and lose this trade and then take this trade, so we lose 10 and then so 20, 20, so that's 40 minus 10, so that's 30% again on this day. And then this one would have been a loss. That was an interesting day. Came around here. Whatever price coming, a good rejection though, so can't argue with that. Can't argue with that. That was a nice consolidation though. Price consolidation on the day. Very interesting. guess price kind of pulled back up to consolidation right here, and then rejected there. Now taking that short there, risking higher there, risking that point, so 12, looking for 24. So 36.80. Yep, get it. But seeing how price interact here, nothing. Seeing how price interacts at this base. Next point is here, this area. So price found base, pull back, and then reject it again. So it's not a bad point to get in long, to be honest. So we take that, and we had one loss. Let's say we take that trade there short. Assuming we see that consolidation, because we didn't use that consolidation at all. Assuming we see that consolidation was really square. You know, the consolidation was really square. Some consolidation. This can be called a consolidation, but it already broke through, right? This one was really square, very, 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 very square. And this consolidation here broke through, came back, formed a base here, and then so I guess that makes sense to have taken that trade off of that base, because that's a low that broke this downtrend. This is the base that I formed, so pull back. Not a bad idea to take that trade for sure. Using the overall structure. This consolidation was really nice, so it came rejected. Prior candle of the blue one wasn't the best, but next candle was bearish, so not a bad idea to take that short there, risking the consolidation itself. So 12, looking for 24. 24 is just here, so you know, taking this trade here. In this trade here, risking down there, you get stopped out. And obviously price is now really downtrend. Then we get this nice move. Nice move. Pulls back. I'm thinking about something in a second. This day here. It's the same thing, but this one was green itself. And there was also red line last month high. There was multiple confirmations. This one was just based off of this. We don't know what is here really. Could be something. Definitely not a low. I don't think. I mean, it could be maybe a high or low from some other point. Who knows? But if it's nothing, then it's nothing. But this is where price ran up from nicely. Technically, it's this base here. Technically, it's this base that price ran up from. Technically, so we technically should have waited for that base. And we didn't really get an entry off of that base. This candle still popped out of that base, so waiting for the pullback. We didn't expect a run from the base though, but we didn't get it. And so if you're risking the base, risking down there, get stopped out, and then we get a move here, pullback, entry right there, and close our trade, making 7% or maybe even 10%. Who knows? If we are smart enough. I mean, it's 55. If we get to 55, now I get out there. Right? Might as well. But yeah, we normally wait for candle to close. If you're in this short and then you go in this long as a hedge, and then you go in this short again, that would have been really good. Look at that, I mean 40% on that, on those two shorts, and then 10%, 10%, 20% loss, and then net 10% loss here. Wednesday was where we really had quite a bit of luck because it was straight downtrend. Took a loss here, took another loss off of this base, right? So took another loss here. For this one, I guess so we would have taken that would have made sense. We would have taken this. So if we took this long, then we would have taken this to hedge that long. Because if price went up, we would have made profit on that long. So taking it to hedge that long, and then when price came down here, we're risking down here, right? So we had good opportunity to get out of our long though. And if we did, then good for us. But if we didn't, then that's unfortunate. That's indeed unfortunate. Yeah, so we go in this long, pull back, broke again. So that's break even. Fair enough. Break even on this short here. And then this long is not yet break even because it went up, pulled back, and then broke to the downside. We break even and then we get another short opportunity. So we could always hold it long, even though I break even here. I guess at this point, might as well break even on this short here. But given this candle, it's best to get out of this trade, man. Obviously, it looks like this wants to drop more with this consolidation. So if you are going out of this trade, then hopefully you didn't get back in here. You got in this short here. Hopefully, because this was not a bad re-entry either here or even this black candle here, but it kept on breaking those, so maybe not. And price kept on forming, so we had this consolidation here, and then now it's broken this consolidation here. Whichever direction it really broke out of, which is here, that consolidation was heavy. So hopefully you get out of this, and then you won this too, 40%, and lost 10%. I make 30% there, so 30% here, 30% here, 30% here. Thursday coming in, we got this trade, skin the highs, and then we had all of these movements. On the move up, there was rejections though, so and volume. So on the move back down, it could have continued to the upside, to be honest. We hadn't gotten the drop back down from this point or this point, but at the very least, we should get one from this one, which we kind of did here. So I guess there's that. Kind of did it there, but it went right back up. That candle, honestly, I probably would have just closed that short there. And so there's that. If I had closed that short there, that would have been that. We're not in any longs, we're in any shorts. Because I don't want to use this low, but that definitely is volume. I want to see how price reacts down here. And so price pushes up again. volume again. That's why we're like, what is happening? And then we had this volume to the downside, but then went back up again. Rejection, a little bit of rejection, and then volume on this black candle here. So not the worst, but this volume to the upside is definitely tempting to take long. But the thing is, you don't know where to risk because this low, can't trust it, man. It's way too high. It's not really been tested in much, so can't trust it, man. Unless there was maybe a red line or something. So maybe risk down here. And so if you took the trade here, risking down here, you get dropped. So you best get out of trade up here when you get that chance. And then we get that move. Then we get that drop again. So we want to see our price reacts in here, because we're more bearish on the day, to be honest. So then we take this short here, risking this high, which is better. We have that high there, risking this high, and then risking this candle to the above that high there. And so we get a move to the downside. And then, but there was yesterday's low or something like that here. Yeah, I think it was yesterday's low, and then and there was also this base here. So we get a move up here, strong volume to this consolidation. Not much. Oh, we're waiting for it. I guess it's a consolidation, to be honest, but it's pretty big though. Sheesh. I won't take that. Let's just say we're waiting for price to come up here. We did get this rejection here. Oh, this candle. Oh yeah, we can't even take it long there because the prior candle was ugly. So we'll move that. So if anything, we'll just break even on that. So break even, and so 0% made on this day, basically, because this one didn't take profit, right? It's on 6, looking for 12. Nah, I probably would have gone out there. And so we didn't get a long opportunity. Waiting for price to get back up here. 1340 is when it finally happens that we get an opportunity to go in short. So if we're risking up here, we're risking up both. So not that candle anymore. We're probably risking this candle up here. So we wouldn't have gone in short though. And then Friday, we get this move. Yeah, ideally just take that, risking 12, looking for 24. Don't get 24, but you'd have been able to take that long there if you wanted, risking down there. So you get 20% maybe, or you get, if you took that long, because that rejection there, you get 20%. If you didn't take it long, then you break even, because you break even, or you may have just taken, because it's quite the risk, honestly, because this is technically the high you want to use, because this is where, just like this day here, you wanted to use this high, but really that high is using, so you just risk up there, right? It's pretty close. But on this day here, this has already gone so far deep away from the high, so you're technically gonna use this high, but you also know that there's this point here, so, and that's really the point you technically want to use. You could have just, like, I don't know, man. There's no way you're taking profit at any point anywhere. So maybe you risk literally that 11, and then that would have given you a good amount of profit there. Maybe. Actually, this long, yeah, it's not bad though. That in here, risking this low, so risking maybe 11. So 7 plus 4, so looking for whatever that is. So is this 7? 8 plus 4, so 12. You got 24. And you get 24 here, but probably get out on this kind. And that's that. Alright, stop. Interesting.